Today in this video you will learn everything to get you started to use order blocks in the Forex market or even the indices market. So without wasting any of your precious time, let's start with the topics of this video. In this tutorial you will learn how to identify order blocks on a chart. The main reason behind why we need to use order blocks on a chart. You will learn how to identify a bullish order block. I have realized that most traders can't make a vice versa pattern, so you will also learn a bearish order block just to help you to improve your trading style. And finally we will do some few examples on a real market chart so that you can see what we are talking about. On the second chapter of this video you will understand what is breaker block in a more friendly way. We will also do an example on a real Forex chart to see how a breaker block looks like and even on how to trade it. On the last chapter of the video you will learn on how to use order blocks and fair value gap on the market. For a bonus I will also show you one trading pattern that can get you started today, and this trading pattern is very amazing and easy to learn, so stay tuned. Before we begin with the video I would like to let you know that this video will also give you some tips and tricks that you have never seen before on YouTube. And lastly, if you want the material used for this video in a PDF format, there is a link in the description below to join our Telegram channel to get this book for free. If you are struggling to get the book in the Telegram, just click the channel name and click Files, you will find the ebook written order blocks. The first thing that we need to understand is that, why the heck do you want to use order blocks at the first place? To be specific, this will help you to read price action in an advanced way, even if you are a beginner. You will be able to make sniper entries that you always see on Instagram. I know you were wondering how those traders knew when the market is going to reverse. So today you are going to learn to do the same. Those days when you have trade setup of 1 is to 3 are over. You might be lucky one day and catch a trade that requires a 1 pip stop loss with a take profit of 100 pips. That is 1 is to 100. Let me show you an example. This is you currently trading support and resistance, or maybe you are using indicators with a huge stop loss. Then this will be you after watching this video. Before we get started, please go and backtest everything you will be learning in this video. If you don't do that, then why did you start to trade if you are going to be lazy? This is not a get-rich-quick scheme, it takes time to develop your craft. On this area here, we can see that the market was bearish. But how would we catch the low? Because this is just an illustration, but here on the right you might see candlestick pattern like this on a real market chart. An order block will be determined by a bearish volume before any bullish candlestick. So your order block will look something like this on your chart. An order block can be identified by a bullish candlestick after a bearish candlesticks. But it's not always the case. As we can see, we are using the last bearish candlestick to draw the zone, but all the bearish candles stick, they are all order block area. It will all depend on time frames and how you view the market in different market conditions. This bullish candle here will initiate the start of the order block area. Then this bullish candle here will be where the order block area will end. Just remember that the last bearish volume will determine what is called an order block. I know this can be quite challenging at first, but look at this first pattern. This bearish volume will determine the area of an order block. Plus we can see that price also traded above the previous high. Then on the second example we can see that those candlesticks are very aggressive to the upside. In my opinion, I will take this trades only because of the candlesticks that are very impulsive. The another reason is that impulses set the direction of a trend, unlike a correction. Let's do another example, maybe you will understand what I mean. Here on the left side, you can see that we have an illustration. Then on the right side we can see how the candlesticks will form on a live market. So to identify a bearish order block, you have to find the last bullish volume before a bearish momentum. Here we can see that we have 2 bullish candlesticks before a bearish trend. In this case we will draw the bearish order block on the last 2 candlesticks. Your order block will look something like this. Then the whole area of the bullish candlesticks will be your point of interest, where you will be looking to take a sell position. But what if you want to refine the point of interest? To have a low risk entry? That means you can still take the last bullish candlestick as your order block. Your refined order block will look something like this on the same time frame. This will also reduce the risk in a trade position. Right now let's do practical examples on a real market chart. But before we begin, I want to take a moment and talk about 2 types of traders. Just remember that you will always be self-accountable for your own trading account. So, you are the only person who will decide which trader you want to be. Trader 1, who backtest a lot, will see that they are improving. They hate trading signals because they trust their own analyses more than anything. Once in a while they make a withdrawal from their trading profit. And just because the market is open, it doesn't mean they have to be in a trade because they are way too focused to avoid blowing their trading account. Trader 2. They don't even bother to backtest at all. They are always having that mentality of Forex being a scam, where else they never even try to do it on their own. They always jump from trading strategy to trading strategy after losing a setup. They love signals. They always deposit money into their trading account, and they will never have an experience of withdrawing profit from the market. And lastly, they have spent more money on trading courses than spending to improve their craft. Here on the first example we will identify why market has made this drop. Step by step with in-depth explanation. We can see that if this is our order block, price has never touched that order block. Why? Let me explain. As I said in the beginning of the video that the last bullish volume will form an order block. Is just that by using the last bullish candle will help us to reduce the risk in the market. From the first bullish candlestick's low to the high of the last bullish candlestick will form an order block, so that's why we can see price trading inside the area before it can continue to push lower. The trade setup should look something like this. By using the whole area as order block. But in my trading I will always take the last candlestick to reduce the risk in my trading account. As a trader you should avoid taking risks at all costs because that can really affect your account. Here is another example. But this time we are doing it practically. Can you guess the direction of the market? Firstly, let's start by finding our order block. Now we can see that we have a bullish volume or bullish candlesticks before a bearish trend. So in this case that's how we will draw our order block zone. And if we want to reduce the risk of this trade setup, we will use the last bullish candlestick to draw our order block. In trading we have a lot of different names that describe the same thing, so this zone can also be called a bearish order block, supply zone. You can call it whatever you want to make things fancy. Then your analyses will look something like this. Or you can also say that you want price action to trade above this previous height to tap into the order block. Or you can also say that the liquidity from the sell side was taken. Just to add something to your trade analyses. To reduce the risk we can also use the last bullish candle as our order block. We will use the open of the bullish candle and then to the high of the bearish candle because that's where we are going to put our stop loss. This in the end will refine your potential entry point. Boom. Now we can see that price dropped lower by using this simple concepts. Now let's do another example which is going to be bullish order block. In this example we will do this area with full details. We can see on this one that we have two bearish candles, then followed by another bullish candle. So in this scenario this won't be considered an order block unless if we move up one time frame higher. And lastly, as you see this kind of pattern, just know that price has the potential to destroy an order block. So to be precise, we will always take the last bearish candlestick before a bullish move. So now let me show you the order block. As we can all see, price action reacted to this order block without even trading below the zone. Let's do another example on the same chart. In this area you will understand even more about the reaction on the volume that created an order block. As we have discovered yet that we need to find a bearish volume to draw an order block. And guys, remember this is just a demonstration on how price might respect that level. By choosing the last bearish candlestick will also reduce the risk on the entry setup, and we can see that price action reacted perfectly on last bearish candle before a bullish candle. On this section of the video you will learn about break or block, or you can say break and retest of an order block. It's not very hard to learn if you understand how to identify order blocks. If a bearish or a bullish order block fails, it will become an order block. So the failed zone will be our new point of interest. Let's do a proper example so that you can all understand it clearly. On this example, we will do everything step by step so that even a beginner can still understand it. So the first step is to draw our bearish order block. So to draw the zone again is pretty much easy. You will draw it from the last bullish candle before a bearish candlesticks. So let's do it together. Now that we have our zone, the next step is to find a potential reversal zone. Or make a prediction on how the market will behave when it reaches our potential reversal zone. Now that we have a potential reversal zone, that means we will be looking for the market to come to the zone so that we can try to sell on the order block. But wait. Then what happens when price break above the zone? This broken zone will now become a breaker block area, where you will be looking for the market to come and retest that level before it move higher again. Your next prediction will look something like this. Let's do some practical examples on a real market chart. But before we can begin, let me clear this up. If you love trading, you will always have a clear mind that one day you will still lose some trades, or maybe you lost a trade today due to being impatient about waiting for a confirmation candle. Please stop taking signals because you won't even go far with them. Just because the market is open, it doesn't mean you should always be in a trade. Let's move on to breaker block on a chart. We will follow all the steps to make a sell setup on this area. On the first step, we will identify and draw our order block. Now we can see that we have an order block at this area. Right now, let's say you are looking to go bearish on this order block. Then price action decides to break the previous order block and trade higher. So what happens next? On your next prediction, after price action has broken the previous order block, you will predict that price will try to retest the breaker block and push higher again. And also, price should not trade below the bullish candle's low. Now you will see that price will still respect the zone and then push higher. On this next chapter, you will learn how to use order blocks plus fair value gaps. But before we move on, please make sure that you are subscribed to the channel so that you will never miss our upcoming content. I have mentioned fair value gaps before in the previous video. The link to that video will be in the description below, but I will also touch the basics on this video to understand it if you are still new. Firstly, let's start with a break of market structure on this analysis. We can see that price is trying to be bullish after breaking the previous high here. Then before we can do a lot of things, we also have to identify where the imbalance is at. This space between the wicks is called an imbalance. So we will be looking for price action to touch it or trade inside that area. Then you will wait for price to get into the order block too. Now we have to find the order block on the chart. Here we can see a bearish candlestick, which is also a bearish momentum before an up move. So in that case, this is our order block. Then our analyses will look something like this, where we want to see price action to fill in the imbalance and then trade into the order block. Now let's look at how price action unfolded on the order block and imbalance. Now before we end the video, I would like to show you how your daily setup should look like in both bullish and bearish analyses. You can pause the video and write them down so that you can understand when I do two practical examples. The first step that you need to do if you want to find a buy setup is that you need to find a low that was manipulated. So let's do so. Now we can see that the sell side liquidity was taken here. Now that we have the sellers in the market, we have to keep them in their losing trades. So the next step is to find a break in market structure. Now that we have a break in market structure, that means we will have an edge over other traders who are still in a sell after they thought the market was going to be bearish. So the next step is to find an order block that we want to see price trading after the break of structure. We have spotted the potential reversal area using the last bearish candlesticks as our order block area. Now let's see how the market unfolded after the retest of the order block area. See how easy it is? If you know the pattern and follow all the rules clearly, you will be able to make sniper entries on almost every trade. So let's try another example, which will be a bearish setup. You will see that everything is still the same, but vice versa. Now let's repeat the same rules, but now we will also reduce the risk on the entry area. So follow all the steps carefully. Step 1. We identify the break of structure, meaning we have to see price action trading below the previous high or low. Then we also have to find the buy side liquidity that was grabbed. Step 2. Here we can see a bullish candlesticks that will form our order block area. But we can still reduce the risk on the trade setup by using the last candlestick before the bearish candles that broke the previous low. Step 3. This is how you should reduce the risk on the trade by using the last bullish candle as your order block. But the analysis doesn't end there, we have to add more steps. Then on step 4 is where you should find that fair value gaps below the bearish order block. By doing so, it will also help you to wait for the market to fill in that gap before making bad decisions that could discourage you from being a better trader. Then your full analyses will look something like this. And there's more information that was left out on this video because this will become a series in the future to continue this. So now let's see how price action unfolded on this trade setup. Boom, you make money of a simple trade setup, but this doesn't mean you will always win every trade. You will still lose money when trading. Take trading as if it's like a business, and remember, every business will always have a loss in the future. There is no road without bumps in the world, but taking risk will eventually put you in the right mindset. I hope you all have enjoyed this video. I guess I will see you on the next one. Also leave a comment below if you are still confused and check other amazing videos on the channel. That will help you a lot.